In this video, I'm going to share with you the 8 simple rules I follow to pick stocks for profitable option trades. So one of the first things I do before investing in a company is doing some research to even understand if I like the company. So before I invest in a company, I need to know what the company is about and really understand what they do, which means I have to like what they do because it aligns with my values and beliefs. For example, if I'm a proponent of alternative energy and electric vehicles, I would like to see that a company that I'm about to invest in has policies and activities that align well with what I also believe in. So I tend to lean towards companies whose mission statement and activities support what I believe to be important. One quick and simple way to find out more about a company is to check out their website. Almost all websites have an About Us page. I'll demonstrate a few examples so you can better see and understand what I'm talking about. Here's a website for a popular financial institution, Wells Fargo. As I move to the bottom of a page, I see they have a link entitled About Wells Fargo. So if I click on this link, I can find out more about Wells Fargo. In specific categories, investor relations, corporate responsibility, responsible lending, leadership and governance, their newsroom, social media, who they are, and information about actually working at Wells Fargo. Here's the website for NVIDIA. And as I move to the bottom of their webpage, I can see a link that says About NVIDIA. So I click on this link and I can find out more about who they are, their history, the biographies of their executives, career path, locations, what they do for recruiting from university students, and some of the recent awards they've won. Here on the website for Abbott Laboratories, I can scroll to the bottom and find a link about Abbott, and then I can find out more about who they are and what they have to offer. And here's one more example for the company Honeywell. I'm going to scroll to the bottom of the page and I can see they have a link for About Us. I can click on that link and find out more about the Honeywell Corporation, what they do, more about their senior leadership, and their corporate responsibility and values. But I know that there's more to a company than just their desire to do good things. I also want to see that the company has growth potential as a long-term investment. So another thing I check is, do other investors like this company? And one way for me to quickly check this and determine that there is interest is to check on the volume of shares being traded. One quick way for me to check on the volume of shares being traded for a particular stock is to go to Yahoo Finance, enter the symbol name, and then I'll get a quick reading on the total volume of shares traded as well as the average volume. So in this example, for Apple Corporation, stock symbol AAPL, we could see the volume is 62.6 million shares with an average volume of 109 million shares. Here's an example using Nike Corporation, stock symbol NKE, and we could see the volume is 2.6 million shares with an average volume of 6.2 million shares. And here's one more example using Bed Bath & Beyond, stock symbol BBBY. It has a volume of 1 million shares and an average volume of 12.7 million shares traded. And so I like to see a trading volume of greater than 1 million shares. And this is because higher volume typically means more liquidity. And I want more liquidity because it enables me to enter and exit trades more easily. Another thing I check for is to make sure that the company is large enough. So what do I mean by this? Well, I want to see that the company has a stable foundation. So from a financial perspective, I want to see that the company has a market capitalization that's in the hundreds of millions of dollars, and preferably in the billions of dollars. Take a look at this example for Aerocentric Corporation, stock symbol ACY. We could see that the volume is at 44 million and the average volume is 2.7 million. But now, so that means there's lots of interest in the stock and shares are trading easily, so there's lots of liquidity. However, take a look at this market cap. It's only $20 million. So for me, this is a red flag that the value of the company is relatively low. This next stock, Integrated Media Technology Limited, stock symbol IMTE, has a volume of over 1 million shares. However, the market cap is just over $43 million. So these are just 2 examples of stocks that I would avoid just because the market cap is insufficient. Here's an example of a company whose shares I might consider investing in. It's BGC Partners, stock symbol BGCP. It has a market cap of 1.9 billion shares. And here's one more example of a stock I might consider investing in. Vermilion Energy Incorporated, stock symbol VET, has a market cap of $1.1 billion. So with a large market cap, I might consider investigating this company further. But keep in mind that just because a company has a large market cap doesn't necessarily meet all the criteria I'm looking for when I want to find a company that has a stable foundation. Now, Here's an example. Riot Blockchain, stock symbol RIOT. It has a market cap of $4.7 billion, and the trading volume is pretty healthy. Look at that. It's 16.8 million shares with an average volume of 30.7 million shares. So from the first glance, this company looks pretty good. However, I did notice one thing. When I checked on the profile of the company by clicking here, I noticed that it only had 8 full-time employees. So for me, this would be a red flag for me to investigate further. Companies that have large numbers look great. However, if the number of employees is low, I take that as an indicator that there's a higher potential that this company could go under if the founders or CEO decides to walk away from the company. What I have found is that companies with more employees tend to have more responsible leadership, and so they're less likely to walk away from a company. For example, let's take a look at Apple, stock symbol AAPL. It has a market cap of $2.1 trillion, a volume of almost 70 million shares. And if we check the number of full-time employees, we see it has over 147,000 employees. So the likelihood or probability of Apple Incorporated ever going away anytime soon is very low. Next, I want to invest in companies that are successful. I want to see that the company has a good history of growth and financial success, because that tells me that the future may hold more of the same. And one of the quickest visual indicators I know of is to check the stock history and look to see that the stock is trending upwards or in a bullish trend. When checking for a bullish trend, I like to use a daily chart going back for at least 1 year. I'll share 3 examples with you. This first one is for Advanced Micro Devices, stock symbol AMD. This chart goes back to 2019. And if I simply imagine a line starting from the share price in 2019 to the current share price of today, I should see an upward trend on the arrow. This next chart is for NVIDIA Corporation, stock symbol NVDA. This chart goes back to 2019, and if we imagine the line drawn from the share price at that point to the current share price, we can visualize a line sloping upwards. And this last chart is for Apple Incorporated, stock symbol AAPL, going back to 2019. And this chart is another good example of a share price that starts low and trends upwards to the current market price. Next, if shares are getting assigned to me or I'm actually selling the shares to a buyer, I want to make sure that the price is reasonable. So one of the first things I do to get familiar with the share price is understand the current support and resistance levels. Support lines fall below the current market price, whereas resistance lines are formed above the current market price. Knowing the support and resistance levels and the current market price relative to those levels helps me understand and predict what this price might do in the future. On this chart, the current price is resting right on the support line. Now, of course, there's no way to know what the next price movement is going to be. Is it going to move up, down, or sideways? But for me, whenever I see a situation like this, my first thought is to think that the price will bounce off support and move upwards. For this next stock, Builders First Source Incorporated, stock symbol BLDR, I see a resistance line at $47.57 and a first level support at $42.23. And the current market price closed today right at resistance. And again, no one knows what's going to happen tomorrow when the market opens, whether the stock's going to trade up, down, or sideways. But given its current position, I tend to think that the price may open sideways or down, because the price may have a difficult time breaking through the resistance line. So again, knowing a stock's current price relative to the support and resistance line can give some indication of what might happen in the future. In addition to knowing the support and resistance levels, I also want to know where the current price is relative to the 20-day moving average. And more specifically, I like to see that the current price is just below the 20-day moving average. Here's a daily chart for Analyte Capital Management Incorporated, stock symbol NLY. The stock price is shown in blue, and the 20-day moving average is represented by the orange line. And as I zoom in, you can see that the current stock price is just below the 20-day moving average. I like this situation because it may indicate that the shares are oversold, and so there may stimulate some buying in the general market, which could drive the price higher if there's more buyers. The next thing I look for when picking a stock is I want to make sure I avoid the earnings announcement of the company. Companies that are publicly traded are required to report earnings on a regular basis. It could be monthly or quarterly or semi-annually or annually. It just depends on the company. During the announcement, the company reports how they did in that last reporting period. Obviously, what they report could be interpreted as good or bad news, but it's been my experience in the past that the market can act irrationally based off these earnings reports. For example, I have seen companies where they report earnings that beat the analyst estimates, but the stock price will take a dive immediately afterwards. And I've also seen it in the other extreme, where a company will report earnings below what the analysts estimated, but then the stock price will shoot up afterwards. So in my opinion, the best thing to do is avoid earnings week. In other words, I never want to have an option contract expire the same week that the company is reporting earnings. Here's a simple method for identifying when the company is going to be reporting earnings. First, go over to Yahoo Finance. Then search for the earnings calendar. And then from here, you can enter the stock symbol of the company you're interested in. For example, if I specify Apple, I get a list of the earnings dates as filed by Apple. I can see that the next one occurs on April 28th, 2021 at 6 a.m. Eastern Time. So if I'm buying and selling option contracts, I want to make sure that the expiration date doesn't occur during the same week as earnings are being reported. If you like what you've seen so far, do me a huge favor and smash the like button. Whenever I invest money in the stock market, I need to know how I'm going to get it out. And so I always have to plan an exit strategy, which means I need to watch the option contracts that I have in place and be ready to act. So I need to monitor the market price to see what it does. Does the share price go up? Does it go down? Or is it stuck and is it trading sideways? And then based upon what's happening in the market and with the share price, I need to know what I'm going to do. Because if something happens in the market or in the sector or the industry or with that individual company, I want to be ready to act and react according to, what I have in place. I don't want to have to be faced with a situation and not know what to do because I may end up missing the boat. Depending upon what's happening with the option contract and the share price, I might want to just go ahead and let the option contract expire. Let the option contract expire worthless. I collect the premium and my collateral gets released back to me for me to use however else I want to use it. Or maybe I could do something more proactive, like close out my option contract, in which case I would buy to close my option contract, thus closing out my position and terminating the option contract. Or I might even roll out of the option contract, rolling up to a higher strike price, or rolling down to a lower strike price, but on a different expiration date. It's kind of funny that I have to mention this one, but it's something that needs to be said, and that it's okay to take profit from an option trade. This is especially true in today's market. Given the current market conditions, in recent past performance, I find that some of the investors I talk to are coming to expect phenomenal returns like 100% or even higher. I think that the V-shaped recovery that the market experienced during April, May, and June of 2020 kind of spoiled all of us. Isn't it funny how we get a 10 to 15% return on a 1-month investment and we don't think much about it because we just expect that? So my point here is we shouldn't be complacent in our option trading. We should be proactive, monitor option contracts, analyze the risk versus the reward, and be ready to take profit. For example, if I have an option contract in play that's set to expire next week, and it looks like it's going to expire worthless, it's actually okay for me to close out the contract at that point and just recover 80 to 90% of the premium. So by executing a buy to close, that contract terminates, my collateral gets released, and allows me to use it for another trade. On March 21st, 2021, I published this video for all of my Patreon members. This was an opportunity to sell a cash secure put and collect a large premium in return. I actually ended up selling 2 different cash secure puts and collecting twice the premium. But then as I was watching and monitoring these transactions, I noticed that the market conditions had changed, and so I decided to close out these transactions early and lock in the profits. I created a simple worksheet so that we can walk through the activity for each of the transactions and see the net effect it has on my account balance. My starting balance on March 25th of 2021 was $1,500. On that morning, I decided to sell a cash secure put for stock symbol HGEN. I picked the expiration date of April 16th of 2021, which gave this contract a duration of 22 days. Now I picked the strike price of $7.50, selling one contract, and I received 90 cents per share as premium. So when this option contract got filled, a credit of $90, the premium that I received, was added to my account. The net result was my account balance was now $840. So that's computed by taking the $1,500 that I started with, subtracting $750 because it's now reserved as my collateral, leaving $750, but then adding $90 to that in order to give me my current account balance of $840 and $750 reserved as my collateral. Now later that same morning, I sold a second cash secure put, also for stock symbol HGEN. It had the same expiration date, April 16th, 2021, and it also had the same strike price, $7.50. But what's different here is that the premium I got paid per share was 95 cents per share. So the total premium I received was $95. So my new account balance at this point is $185. $750 was reserved as collateral for this second cash secure put, making my total reserved $1,500. But then I also received $95 in premium, so that was added to my account balance, making my new total $185. So then what happened next? Well, with the change in the market conditions, I decided to close my option contracts that I had open for both positions. On March 30th, I submitted a buy to close order. Now let's go over to my account history where we can see where this buy to close order was filled. So I submitted this buy to close order on March 30th, and it was filled that morning at 8:54 a.m. Pacific time. And you can see that both contracts were fulfilled at 5 cents per share. So I paid a total of $10 in order to close both contracts. So now I'll update my worksheet with the information for this buy to close order. My account balance was debited $10 in order to pay for this buy to close order. So my account balance is now $175. But then the $1,500 that was reserved as my collateral is now released back into my account, and my account balance at this point is $1,675. So that concludes the activity associated with selling these two cash secure puts and then following it up by closing them out. And my final ending balance is $1,675. And from that, my net profit is $175, which represents an 11.67% profit from this transaction involved with selling two cash secure puts and then closing them out in a total of 5 days. Before I end this video, I want to mention one last thing that I do to try and get a little bit more profit out of my option trades. So when I'm researching, analyzing, and trying to pick stocks, I also tend to look at stocks that are in a hot sector or a hot industry. Alternatively, if I can't find stocks in a hot industry or hot sector, I always check out the beta value for the underlying stock that I might use for an option trade. If you don't know where to find the beta value, you can easily go to Yahoo Finance, type in a stock symbol, and you'll find the beta value right here. Here we're looking at Apple Incorporated, stock symbol AAPL, and the beta value they have listed is 1.22. Tesla Incorporated, stock symbol TSLA, has a beta value of 2.01. Advanced Micro Devices, stock symbol AMD, has a beta value of 2.06. Coca-Cola Company, stock symbol KO, has a beta value of 0.62. Wells Fargo Corporation, stock symbol WFC, has a beta value of 1.32. By now I think you get the point. So we're looking for beta values that are greater than 1.0. So for me, I like to find stocks with a higher beta value, a beta value of greater than 1.0. And that's because a higher beta value will mean more volatility in this underlying stock. And that volatility means there's going to be more risk. But because there's more risk, there's going to be potentially larger rewards. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.